Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the medium time frame bullish scenario where we still expect a move to the upside in either a wave 3 or a wave C after wave 2 or B is in. Currently, you can see that price is finding support on the 236 Fibonacci taken from the low to the high of wave A or wave 1, which is a very rare target for both a wave 2 or a wave B. The most common target area for a wave 2 is between the 05 and the 786, and the most common target area for a wave B is between the 382 and the 886. So yeah, preferably you want to see price moving to the downside at least once more. Of course, the question is, will we get it? Well, we have some news this afternoon, so let's wait and see. But we go into the low time frames to assess the probabilities more locally. If we look at the 382 over here, then you can see that price does have a bit of a support area around the 382, which is between 28.8k and 29.1k. And also the 0.5 is in the middle of a target box over here. Again, a support area between 27.8k and 28.2k. And that one is quite interesting because if price is moving towards the downside, then it will enter the value area of this very high time frame range. And once you enter or go below the value area high, the probabilities are quite high to go to the point of control of the range, which is sitting at 28k. So yeah, this is definitely an interesting target area, but of course price has to first move into the value area. If we go to the bearish scenario, then we still expect a move towards the downside and then a wave Y. In this particular scenario, we then have a three-wave structure where wave Y by itself is also a three-wave move to the downside. The most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, with wave X finishing after an expanding flat, which is an ABC structure. Now inside a wave Y, the most common patterns that you see are a zigzag, a flat or a triangle. Zigzag is a 5-3-5 structure to the downside, which seems incredibly unlikely because of the range that we have over here. Then you have a potential flat, which is a 3-3-5 wave structure where the expanding flat is most common, where then wave B takes the origin of wave A for then an impulsive move to the downside. However, this wave A did not retrace deep enough for the wave C targets to be all the way down here, so at least it has a higher probability of playing out than the zigzag, but it's still not great. And a triangle, well, currently I don't see any way this is a triangle. Sometimes, very rarely, and there's sometimes a bit of discussion, you could potentially have a WXY scenario with a W, for example, being a flat, then X is a range again, and then another Y to the downside. But that is very hypothetical where price is at the moment, so we just wait and see. The Fib times on the chart are a comparison of the time it took to develop wave W with the time it takes to develop wave Y. And the 1-to-1 over here, which is a common target time-wise, is on Saturday the 22nd of July. So it's not too much time left for price to potentially move towards this area. The 1.618 is also on the chart, which is sitting on Tuesday the 8th of August. If we then go to the low time frame bearish scenario, we still expect a move to the downside after this whole range that we've been in for a couple of days now, quite a lot of days actually, where in yellow we're looking at a WXY scenario, which is a 3-3 and then another 3-wave structure to the downside, while in blue you see an ABC regular flat, which is a 3-3, and then you're going to be looking for a 5-wave move to the downside. The target areas for a regular flat and a wave Y, however, are not too different. Both are taken from the high to then the low over here to then either the high of X or the high of wave B. And that explains the difference between the 1-to-1 and the 1.236 in the level over here. Now, the 1-to-1 in blue, 29.5k to the 1.236 in yellow at 28.8k is a nice confluence with each other. And also, again, you have that target box around 29k in this level as well. So this is a very interesting support. And if price decides to move to lower levels, remember, this is the area where the point of control is of the volume profile, which is sitting between 27.8k and 28.2k. So that is an interesting level as well. And also, these are the levels where the 1.618s are of both of these scenarios, which are rare targets in this case. In the bullish scenario, I like to look at this bars pattern. And what is important in the bullish scenario is that price is going to take this high over here at 31k. Now the bars pattern that you see is a little piece of historic price action that I copied, because the price action that we got locally over here, let me actually show you what I saw happening over here, reminded me of price action that we got actually quite recently, which if I go to the 50-minute and I zoom out, go to the left side, I like to show you it was this part over here where price then ranged horizontally for a while, moved up, moved down, moved up again. And this is then why I say, if this is the 31k high I just mentioned, that I would like to see it taken, which then increases the probabilities for upside, because then it started ranging before a new pump. And basically what I did is I took the price action over here with the bars pattern and I copied it on top of what we have at the moment. And then you get this pink price action, the bars pattern right on top of the price action that we have at the moment. And actually it's following the bars pattern quite nicely, but now of course this here, this peak is not yet in where we take the high of 31k, and as long as that one isn't made, the probabilities are to the downside. The moment price is taking this high, probabilities might switch to the bullish scenario. Now below price here at the moment we do have a support area which is sitting between 30.1k and 30.3k. so if price is moving to the downside, we wait and observe how price is going to react over here. Now of course this impulsive structure is not very nice to count. Honestly, it's a horrible impulsive structure to the upside, but as the bars pattern has proven in the past, it can be an impulsive structure where this is then a 1, 2, 3, 4, 5, where if you go to the line chart, this wick of the wave 4 is actually non-existent, and then wave 1 and wave 4 in pink do not have overlap. So if we basically make this a line chart right now, then you can see if this would be a wave 1, look, if this is wave 1 over here, it has overlap with a potential wave 4 and then a 1, 2, 3, 4, 5. That's not really what you want to see. But if this is the wave 1, then there is no overlap. It's just very confusing price action in the bullish scenario. So that is why, as long as this high isn't taken, the bearish scenario is preferred. If we go to the low time frame CVD divergences, then you can see the bullish CVD divergences played out, higher low in price, lower low on the CVD. This was the target, has been wicked very nicely. A swing failure pattern trade setup, by the way, as well at this high, where if price takes this high over here, you have a wick above, closing below, then the close is the entry, and then the moment price is moving towards the downside, you're going to put your stop loss break even, because of course you don't really want price to go back to this area. So yeah, this was actually a very nice swing failure pattern trading setup, where on the lower time frames after that setup we started to see bullish and bearish CVD divergences, but first the bearish ones, where price moved down and we saw AGGR, the CVD chart, moving up. Those are bearish in candle divergences over here. Then price moved up, down, some bullish divergences, and then some more bearish ones. And these ones were quite powerful because it happened on both of the lines. So if we zoom in to what's been happening more locally, and I go to the 5-minute, then first of all, you can see over here, price moving down, but the yellow line moving up. So bearish divergences, like people are absorbing the longs, pushing price to the downside, very, very powerful indeed. Then move up, move down, when on yellow we created some bullish CVD divergences, but very soon after, the yellow line as well as the blue CVD line created bearish CVD divergences, because a lower high on price and then a higher high on yellow and a higher high on blue, which then is absorption of market longs, price pushing towards the downside, where the target is taking this little low, which it has almost done, not yet. We have news today as well, very soon. Let's see if we can break out of this range at 2:30 p.m. Central East European time. So make sure you trade safe around this time. Have your stop loss, your risk management, have everything in place to make sure you do not get wrecked during the news, because it might be very volatile. And then finally, the probabilities. Well, on the medium time frame, the probabilities are higher for the bullish scenario, where we eventually look towards the upside in either a wave 3 or a wave C. And on the low time frame, we are looking, as it stands now, for the probabilities going towards the downside. But the moment this high gets taken, the probabilities, in my opinion, might switch towards the bullish scenario. This is the last video before the news, so let's wait and see, and I'm gonna see you again at 7 p.m. Central East European time. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.